From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for February 28th, 2018. Today we're going to take a look at the GBPUSD, the Great British Pound, versus the US dollar for today's trade analysis. I want to take a wide angle view of this currency pair first here on the daily time frame. We're looking all the way back into early part of 2017, January actually, of 2017, bottom left-hand corner of the chart. What's important here is I want to look at the blue trend line, the rising trend line for much of course 2017. We were in a rising trend for the pound dollar, and you can see that reflected with the lows getting higher along that blue trend line. Not only that, we can also see the 100 period moving average. There's a green wavy line coming into the chart, and you can see the market rising along that 100 period moving average, which basically was paralleling the blue trend line. Now that we see where that comes from, let's zoom in a little bit. Now you can see where that trend line and moving average are, all the way down here towards this orange shaded area down into the 1.36 level. And something else that's interesting about 1.36 is you follow it back in time, you see this significant resistance back here on the left hand side at that same orange zone 136. Resistance here, resistance here, resistance here, finally breaking out and making its new high. But very interesting is that area of resistance and the 100 period moving average blue trend line coming into 1.36. Now I know we're a long ways away from that, but that becomes an intended target if the market begins to shift its trend to the bottom side and start moving lower. So what we're looking for is evidence that the market might be looking to target down there back towards the blue trend line and the 100 period moving average. That evidence comes on, of course, lower highs, which if you look here on the chart, I've drawn this black trend line that show the last last three highs since making the highest high. So we have it attached to the highest high, and we see one lower high here, we see one lower high here, and we see one lower high here. So we see three distinct lower highs. So if it's going to go down to that 136, the blue trend line 100 period moving average, we're looking for clues that the trend is shifting, and lower highs is the beginning phases of a shifting trend. We also would be looking for lower lows. So what we're looking for is the break of support, the break of lows, to give us a clue that the trend is shifting. Now today we're challenging 1.38, 1.3815 or so, the blue shaded area, just about where the current market is sitting. Let's go ahead and zoom it in on that a little bit. And let's go like this. And you look back here, this black box, 1, 2, 3, 4, 5, 6, 7 days challenging that blue zone, 138.1550 is what the blue zone is set at. And you can see it challenging it for several days, unable to break it, bouncing back up. Here we are again. Look at this. We're challenging 138.15 again today. So the clear clue that we're looking for is the breakdown of this 138.15 blue shaded area could begin the next phase towards that major area of support down here, 136, and the orange zone that we talked about on the wide angle view. But it's going to take a breakout underneath there for us to have higher confidence that that's going to happen. We don't want this to happen. We don't want to take a short and it bounce back up like it did back here during this period, 7-day period back here. So we look for two reasons to go short usually. Either we look for the breakout under support or it rallies back to resistance. That's not out of the question. We could see it back towards the yellow zone or possibly even back towards the orange zone with some motivation to cause it to go back up. But we also want to watch for those breakdowns. So a breakdown of the blue zone, 38.15, we begin looking for the next leg lower, possibly all the way down to 136 at the bottom of the chart. If it doesn't do that, we'll watch for support reversal, but I don't think there's anything right now that tells us that it's going to turn around and go back up. 4-hour time frame doesn't really change any of that. Look at this bearish movement we've seen today. Yesterday in the live trade room, we talked about the potential breakout underneath the yellow shaded area. Hey, guess what? There it is right there. The breakout underneath the yellow shaded area, 3,900. It opened and closed underneath 139.05, and look at this move. So if you happen to take the short into 139.05 just a few hours ago, then you're into profit. I think that's basically what we're looking for down here under the blue zone as well. The market to get under it, stay under it, not a false breakout. What does a false breakout look like? We'll take a look back here. Not too hard to see. The market got underneath, was unable to stay underneath, turned around and went back up. So that black circle back there is a false breakout. We don't want that to happen, do we? We don't want to sell it under the blue zone and it suddenly turn back around and go back up. So for this example, we're looking for the real breakout underneath 138.15 and the continuation lower for the pound dollar over the next coming weeks.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.